The markets are red across the board and everyone wants to know, is this the start of something bigger? Let's find out. What's up everyone? I'm David Garcia and I'm gonna tell you today whether or not we are in a market recession, just a correction, or if this bull run is just gonna continue to run. Starting with the first topic, unemployment. In July 2023, we saw an increase of 215,000 jobs added. Compared to this year, we've only had 114,000 jobs added. This is indicating a slowdown in our job growth. A lot of people are saying it's not that big of a deal. There's a lot of job openings, but we don't know if those job openings are underpaid or they're overqualified. You know, there's many factors. We are in an uptrend with unemployment, and that is spooking the market. The next topic, this may be a controversial one, is the AI bubble. We've been in a crazy bull market because of AI, and there seems to be no end in sight in this investment. The reason why a lot of investors believe that we are in a AI bubble is because there has not been a way to monetize other than a subscription to a chatbot. They have not figured out a way to monetize AI, but within the next few years, they should be able to find a way to monetize it. Another reason why people believe that we're in a bubble is because Nvidia's stock performance within a year has literally 10x. Nvidia's earnings are going to come out the end of this month and they're going to kill it. I've heard that there's cases that they might miss because they're behind on Blackwell, which is their new chip, but many of these companies are pouring billions and billions into Nvidia for their GPUs. We shall see if we are currently in AI bubble. So the next reason why the market is thinking is because earnings season is here and it has been so much drama. Most of the Magnificent Seven has posted their earnings and we're going to talk about them. And in case you don't know what the Magnificent Seven is, that is our top stocks in the S&P 500, such as Apple, Meta, Google, Tesla, Nvidia, Amazon, and Microsoft. Every single company in the Magnificent Seven has beat top and bottom except for Amazon and Tesla, actually. So Tesla was to be expected. Not many people are buying cars right now. Rates are high, cars are expensive, and a lot of people are cutting back. Amazon was a very important earnings because a lot of investors want to see how the consumer is doing. This quarter, they just missed by $800 million. Not really much when you're dealing with like over $100 billion, but yeah, the markets did not like that. This may not be a reason why stocks are dropping, but it could be a reason why people are just selling out of Apple. And that is because Warren Buffett has sold 50% of his stake in Apple. So the first half of 2024, Warren Buffett has decided to sell more than half of his Apple holdings, reducing his holdings from a billion shares to 445 million shares. A lot of people are wondering, why did he do this? And this is why I believe that it could be a reason why people are selling out of the market, mostly retail investors, because they tend to be the most emotional. So the reasons why Warren Buffett has probably sold out of Apple is because of valuation concerns, or he's overweight in his portfolio, growth is plateauing, and potential tax advantages. This has brought Berkshire Hathaway's cash holdings to $277 billion, indicating a defensive strategy during times of uncertainty. Let's see what Mr. Warren Buffett decides to do. Is he going to take advantage of the market crashing? It seems like he's been sitting on so much cash for the past few years. I know he's mentioned that when you're at his level, it's kind of hard to buy things because when you buy something, everyone tends to look there and it's hard for him to continue to add to his position. But let's see what he does further down the road. My last and final reason why the markets are tanking. So this one is called the yen carry trade. What even is the yen carry trade? So in layman's terms, Japan had negative interest rates for the past few years, and investors were taking advantage of that, borrowing money at a negative interest rate and taking those funds and investing in the US stock market. So when the Bank of Japan decided to increase rates that increase the value of the yen, and that essentially made investors that were trying to take advantage of this arbitrage sell out of equities in the US or across global markets in order to cover the losses of the yen. This is what made stocks flash crash on Monday, August 5th. Do you guys think that there's going to be a further another downtrend? We shall see. This is not something that I can predict, or not just anyone can predict, but let's get into what I'm gonna do in this market. I'm just gonna continue to dollar cost average into my core holdings, and I'm gonna continue to take advantage of the downtrend, and I'm going to do the thing that Warren Buffett tells every single person to do, and this is something he has also learned from Charlie Munger, and that is to buy great stocks at a fair value. So think of this downturn as a sale. You're trying to buy something and you're like, oh, it's too expensive, I'm not interested, until it drops 10-20%. Well, that time is now. You need to take advantage of now and stack your bag. Let me know what you guys are gonna do under this market uncertainty. I know I'm gonna continue to buy. I'm also interested in knowing what you guys are doing during this market downturn. Are you guys just staying in cash? Are you guys gonna be continue to DCA, or are you gonna be buying the dip? Let me know down in the comments. Like, subscribe for more.